Welcome to REIT Magazine's weekly report. I'm Matt Bichard.
And I'm Alan Kenny. Our first story this week comes to us from Canada, where Loblaw Companies, the country's largest grocery chain, announced plans to create a publicly traded REIT. The planned company will own 35 million square feet of real estate with a current value of more than $7 billion Canadian. Loblaw will retain a majority interest in the company. The IPO is expected to be completed next year.
That wasn't the only big news overseas. Singapore-based Global Logistic Properties revealed that its arm in Japan, GLP J-REIT, plans to raise up to $1.4 billion through its IPO. GLP J-REIT is set to begin trading on December 21st. Global Logistic Properties announced plans for the IPO back in November. At the time, Vice Chairman Jeff Schwartz called the move a significant milestone in global logistics history.
U.S. retail REITs have a stable credit outlook, according to ratings agency Moody's. In a column posted last week on cpexecutive.com, Moody's Vice President and Senior Credit Analyst Merrie Frankel said retail fundamentals have stabilized to the point that investors shouldn't expect any material changes to their ratings in 2013. Currently, Moody's is maintaining a stable outlook on 9 of the 17 REITs that it rates and a positive outlook for 6 others. Frankel recently spoke about the state of the REIT market in a video interview with REIT.com. She said the credit markets are readily accessible by REITs.
There's great liquidity for our public REITs and public companies, and the issuance, in fact, even according to the statistics on your website, have been unprecedented. So far, there's been approximately $60 billion of issuance this year. $32 billion of that has been equity, $17 billion in unsecured notes, about $10 billion in preferred stock. So definitely the credit markets have been open for the public companies, and they've had access to all 4 quadrants: debt, equity, public, and private.
Black Friday has come and gone, but holiday shopping is still going strong in the United States. And with the new year quickly approaching, REIT.com spoke to a number of retail REIT CEOs about the dominant trends they see coming in the next year. And be sure to visit REIT.com for full videos.
The two that I watch a little more closely is what's happening broadly with employment, and then secondly with income trends. Obviously a third one is savings as well.
We're seeing smaller store prototypes across the board. Even the most successful retailers are trying to do a little bit more with a little less store size. So we think that's going to continue, especially as they integrate their e-commerce and internet operations with their store operations.
I think the other thing is to remember that interest rates have been going down for 31 years, and they're very low, and likely at some point to go up in the future.
That concludes this edition of REIT Magazine's weekly report.
We'll be back next week, and in the meantime, be sure to stay up to date on all the latest commercial real estate news at REIT.com and realestateinvestmenttoday.com.